I put together a study relating global liquidity, market broadening, and sentiment. Let's have a look. This study was conducted to verify and investigate the relationships between global liquidity in blue, Bitcoin dominance in orange, and others' market cap in green, with the crypto fear and greed index indicator and year on year Bitcoin returns. 1. Liquidity, Bitcoin dominance, and others' market cap are overlaid on separate price axes in the top pane for comparison. 2. Bitcoin year on year returns are charted below in the middle pane for comparison in orange, along with altcoin returns in green. 3. The crypto fear and greed index is charted in the bottom pane for comparison with the other metrics. Each of these series is visually analyzed and the nature of the relationships are observed. A vertical green line is placed wherever the fear and greed index enters extreme greed, and a vertical red line is placed the next time it enters extreme fear. Having a closer look at our chart here, we can make the following observations. 1. Rapid increases in liquidity produce drops in Bitcoin dominance, expansion of others' market cap, and extreme greed readings. 2. Bitcoin dominance increases in periods when liquidity rises more slowly, while altcoins lag and fear and greed is moderate or fearful. 3. Others' market cap increases as liquidity increases until the rate of increase slows. 4. Bitcoin returns peak before others' market cap peaks, while liquidity peaks after the decline has already begun. 5. The crypto fear and greed index appears to correspond more strongly to Bitcoin year on year returns, and greed readings correspond to and precede the others' market cap expansions. 6. Crypto fear and greed index is closed source, and so the code cannot be examined to determine other possible relationships. 7. Both Bitcoin and altcoin returns are becoming less and less reactive to increases in M2 over time. Having a closer look at the fear and greed index and the placement of the start and end points for these episodes of greed that we have on the chart, we can see that generally it does contain the peak of altcoins and also the peak of Bitcoin. However, it is difficult to precisely judge exactly when the peak would be only based on fear and greed. So we are left with the conclusion that the fear and greed, though generally useful, is an imprecise measure. Possible explanations for the behaviors that we've observed include 1. Liquidity injections in available liquidity drives sentiment first and then market broadening behavior. 2. Bitcoin returns in the past have preceded altcoin expansions because that was the main source of funds as traders used centralized crypto platforms. 3. The relationship between liquidity, Bitcoin, and altcoins appears to be broken as most new Bitcoin liquidity is now ETF driven and less available for broadening into altcoins. 4. The fear and greed index is a sentiment indicator that captures market mood. Spirits are highest when prices are rising. 5. Moves in liquidity precede market reaction and sentiment changes. 6. Both Bitcoin and altcoin market caps are growing relative to the monetary base and therefore carry diminishing reactivity to its increases, beta, reducing returns. Other important lines of inquiry include 1. Fear and greed index on a shorter time scale. 2. Crypto market segment behavior during market broadening events. 3. Other sentiment indicators corresponding to the fear and greed index readings. And 4. The size of previous liquidity injections relative to the crypto market cap at the time and trends implying future behavior. The important outtakes from this study are that moves in liquidity directly drive sentiment and market broadening behavior, and that these relationships are diminishing in scale over time. Not financial advice. Do your own research.